everybody, and welcome back to another Sponge Chat. It's been a minute, I'm not gonna lie, and for that I apologize. The truth is, I've been focusing on the masters, I've been focusing on the blog, my reading, and of course, I've been focusing on the academy. Um, we've been really busy this year, and I'm really happy with where we're going. The only downside is that I don't get as much time to devote to Sponge Chats such as these. But you'll all be happy to know that we're coming back, and that Sponge Chats are evolving. Um, we're still going to have the normal Sponge Chats proper, if you will. So we'll have Sponge Chats where we delve deeper into people's journeys with ELT. But this new, what I'm calling a sub-series, Perspectives, is going to be focusing on one specific area. So we're going to have a specialist or someone who's very experienced in a certain area come on and talk about their perspective within that area. So, for example, our first Sponge Chats within the Perspective series is with Nicola Prentis. And Nicola has been around within ELT for quite a long time. She's worked in materials writing, she's worked in teacher education, and she now focuses on investing and making teachers or writers more aware of how they can make their money work for them. This topic that we touch on it's been quite important for me over the last 4 to 5 years, and I say 4 to 5 years because it was only 4 to 5 years ago that I started to actually realize what money is and how it works. And I mean, this chat was quite interesting because we touched on some points such as financial literacy, something that, like I said, I don't think I really developed that till about 5 years ago. I hope you do enjoy this Sponge Chat. I'm looking forward to hearing your thoughts, your opinions, and of course, your requests. So if you have anything that you'd like us to talk about, please let us know. All right, I'll leave you to that. Have a lovely day, and we'll see you soon. Okay, bye. Hi, Nicola.
Hi.
How you doing? Good?
Very good, thank you.
Very good, very good. Well, thank you very much for being here. In this way, you're based in Spain, right?
Yeah, so in Girona, just north of Barcelona, which a lot of people don't know where it is, and I never used to either, but it's quite an important place.
That's a lovely city, eh?
Mm.
It's really beautiful. If
Yeah,
I remember correctly,
medieval town.
yeah, yeah, and it's got like the roads are like pebbles and things like that. No, yeah,
Cobbles, yeah, cobbled streets and stuff. It's a little bit like it always reminds because I lived for a while in York in the UK, and it's
right.
basically the Spanish version of that.
Yeah. It's really small though, right? Like in
Yeah,
terms of
good.
the
Yeah.
yeah. I went there. I can't remember how long ago, but it was really good. They filmed Game of Thrones in the
Yeah, so unfortunately for me, I got here the year after. So it was season 6, I think. And so I know all the locations, I give people a really good tour. But if I'd been here a year earlier, because the extras, I mean, obviously they had loads of them, and the rules were no glasses, no modern haircuts, no tattoos, which is like, I don't wear these glasses all the time. So I
yeah
could have totally been in it. So
yeah
yeah, I'm gutted. But I mean, it's funny because some of the places they digitally changed things
right.
but you can go and you'd be like, look, this is where Jamie Lannister had the standoff with the High Sparrow. It's great.
That's awesome. Yeah. I was walking around and I was like, yeah, this feels so good. But anyway, that's for another time.
Yeah, the tourism chat.
Yeah, definitely. Okay, so why we're here, right? Just a brief spiel about Sponge Chats. Obviously, Sponge Chats started a while ago, and pretty much they were to look at. My main focus there was to show people or show teachers that there is a career in EOT. You can stay in EOT and branch out to different areas and build quite a professional career in an industry that's not always that professional. And now we're actually starting a new sort of area within Sponge that's looking at perspectives and going a little bit deeper into certain areas. And so you're the first one. Congratulations, you're the first one for that.
Brilliant.
So I always start with a big existential question, which is who is Nicola? Who are you? This is my question.
Yeah, this is one of those funny questions because it comes down to like, what do you give yourself permission to describe yourself as? And I think I don't want to use the word creator because it sounds too pretentious, but really at heart, I'm a writer. And so, I taught for a long time, but I was making my own materials, and then I branched into materials writing formally, and then I was just writing magazine articles, like whatever anybody could pay me for. If I had an idea, I would write it. And so what I'm doing now is teaching again, because I'm teaching people investing, but I had to write all the materials for the course, and I've had to write a lot of newsletter content and marketing content. And I always thought that I'd be horrified marketing was something that I never wanted to do because I didn't understand what it was. And when I realized, oh, it's just writing, love it.
Mm.
So, I've become a kind of content creator, I suppose, but not in that influencer kind of way. But that really, like, my heart and soul is writing.
Right. Brilliant. Excellent. Yeah. Well, I mean, today's chat for us is really to look at, the financial side of ELT, which is often not talked about. It's almost like a taboo subject. And especially when you touch on the word of investing, people kind of shy away. So yeah, I think what you're touching on is really, really important. So if we can look at the chilled investor then, where did this come from? And because like you mentioned, you have quite a long career in EOT, and I mean, even looking at your some of the things that you've done, you've written like graded readers as well. You wrote
Yeah.
a book for Collins as well, I think as well.
Yep.
So I mean, that's a lot of EOT stuff, and
Yeah.
then there's a big change to the chilled investor.
It is. It's a huge change, and I never ever would have put myself down for it. I studied philosophy at university. There is no financial background that I've just been, sleeping on whilst I went and did some traveling. There's none of that. I fell into teaching because I didn't know what else to do. Because a philosophy degree doesn't really prepare you for very much. And I taught quite happily, just bouncing around, going here, going there, feeling a little bit superior to the people that had gone and got graduate jobs and were working 12-hour days. I was, living in Prague, I was in Turkey, I was in, Australia, I was all over the place. And I never thought about money because I always had enough to live where I wanted to
Right.
live. And, but it really was now, I think, subsistence level. But in your 20s, you don't care. And so, then I started doing materials writing. And that wasn't because I wanted to make more money. It was because I wanted to do something else and I wanted to write. And I still wasn't really making any money. It did start to bother me that I wasn't really making any, but it still was, I still had enough for like my single life. But I've got children now, so that did start to change. But I still wasn't a money person, whatever that means to people. It wasn't me. I didn't have pensions, I didn't have any of this stuff. And my sister's got a house, a mortgage, a husband, all of that much more traditional stuff. And she, in the last few years, has been saying to me, like, you don't have a pension. I'm like, yeah, but I didn't have an answer. It wasn't like I had an actual answer. I just couldn't engage with it. And so it wasn't really her nagging that set me off, but it was just a couple of years ago when I realized I've got savings and they're not doing anything.
Yeah.
Because I am a good saver. Like I have done that periodically, all the time really through my life. But they just weren't doing anything. I was just like, there must be something. And I started asking friends and family if anybody wanted to co-buy a flat, because that's the only way that we kind of know of this is how people make money nowadays. You buy a flat, you rent it out. But I couldn't have got a flat by myself because I didn't have enough money for the deposit. And anyway, nobody would have given me a mortgage because I'm a foreigner, I'm a single parent, and I have an erratic income as a freelancer. So that was never going to happen. But all the people that I asked said no.
Yeah.
So, with a variety of reasons, but it just left me going, but what am I supposed to do? And it was really just that process of trying to find out
Yeah.
that set me on this path. And then it was a huge surprise to me that I was interested in it, because I was just like, my sister was talking about pensions. I was just like, oh, this is so boring. But there's so much more to it. And actually, pensions are just investing and they're really interesting.
Yeah.
So I just became fascinated by it. And then I thought, well, shall I, go back to university, do a finance degree? But that wasn't really very realistic. It would have taken me 6 years to do it part time. I would have had to be working. I've got kids. It just wasn't going to happen. And so I just thought, well, what is my skill set? And my skill set is teaching and writing. So then it was obvious what I needed to do.
Yeah.
but I didn't have any of the business skills because I was a writer. So I wasn't, where everybody else suddenly became Zoom friendly and completely like digital, I didn't know how to do any of that. And I certainly didn't know how to do marketing. I knew how to make blogs because I've blogged for a long time, but I didn't know how to make a website. I didn't know what needed to go on. So I did a foundation business course with Rachel Roberts and learned all the stuff I needed to do. And then I was just up at 5 o'clock every morning, making my website, creating my mailing list. I was really on it.
Yeah.
And the course just started in May. So I did a kind of beta run. And there's been really a lot of interest because nobody else particularly was talking about this kind of thing. Like you say, it just isn't the topic. So it's good to be the first one talking about it, but it's also bad because people are they've got a lot of preconceptions about what investing is. And so they meet you from a place like I would have been of like, no, that's not for me. And they kind of can't hear what you're saying because their own noise is greater. So it's
Yeah.
breaking that to be like, look, this is perfectly achievable. I'm not saying you're going to be a millionaire overnight. This is not the kind of investing that I'm talking about.
Yeah. I mean, thinking about, you said something interesting there, like teachers coming with this idea, like preconceptions about money. And I have to admit my own journey with money, if you will. I only really started learning about money when I was in my late 20s. And in fact,
Quite early, actually.
yeah, I mean, the first book that I read was it was Robert Kiyosaki's
Yes.
Dad
Yeah,
Poor
yeah.
Dad. Just
Rich
like,
Dad Poor Dad, yeah. That starts so many people.
do you know what I mean? Like that, and but it was this idea of you know, understanding the basics of. After reading that, I realized I didn't understand anything about money.
Mm,
And it comes back to this idea of education. And
yeah.
I think many of us, once we start learning about money, there's this question is like, why didn't I learn this?
Mm-hmm.
Why didn't parents or why didn't family
Yeah.
members raise our awareness of these things?
Because they didn't know. That's
Yeah,
why. It's because they didn't know. And that's kind of excusable. Your parents didn't know because their parents didn't teach them because things were very different 2 generations ago. But the fact that you're not taught it at school or university is criminal. And I get to the point where I'm just like, it must be a conspiracy. Because rich people, the people who are governing the country, they do know this stuff. And why is it not in a curriculum? I mean, they're starting to do financial literacy at schools, but it's stuff like, how to manage a credit card, how not to get in debt, how to budget. It's still not how to make your money just grow for you. Because I mean, money is literally it's like weeds. If you just put it somewhere, it will grow and leave it alone and it will just take on a life of its own. And well, I think we're not taught this because everybody would retire when they're 40 and would stop being useful.
yeah. I mean, that's my dream. Retire at 40, right?
Yeah.
Um, so in terms of your journey then, what, so you mentioned that, you had this idea of, your conversations with your sister and things like that. What struggles did you go through then? Because you said that you were a good saver, so you already had like a good understanding of what you could achieve with money, right? In terms of that.
Well, no, because saving is, it's nice, but it's not, you're not going to live off that. I had this false sense of security actually, because I'll tell you the amount. So, it took me 20 years to save about £50,000. And that sounds like a lot of money. And because it's a big number and it's certainly more than I could ever earn in a year, or anything like that. So it seems like a big number, but you tell yourself, that's fine. I'm fine. But you could probably live off that for 3 years if you absolutely were on the breadline. So I can't retire on that money. And so it gave me this false sense of security because I always felt like I had this cushion. But I teach money mindset in the course as well, because I think that is part of the whole thing about investing is just your own sort of money demons. I'm a hoarder, so yes, I'm good at saving, but only because I will not release my grip on it once I've got it. So it becomes this thing where, like, as an ex-partner said to me, your savings are useless because nothing would ever induce you to spend them. And it's true. There never would have been any kind of emergency that would have made it okay for me to dip into that because the psychological cost would have been so high that I couldn't have done it. So I could only grow it, and I could only grow it through saving. And then, in the last couple of years, I haven't really been saving particularly because I've not had the disposable income. Children are really expensive. So I haven't been saving, and also because it's like, what's the point? What is the point of carrying on saving? Because it's not earning anything, it's not doing anything, and I can't buy a house. I'm never going to be able to. So I stalled on the saving, even just with this fake idea that £50,000 was going to be enough for me for the rest of my life should I need it. So
yeah, I mean, you touch on a good point. Like if there was any kind of education around finance, the thing that we're all told is save, right? Live within your means, which I mean,
yeah,
it's good advice to an extent, but if you're
it
looking at,
is.
I mean, it's interesting. Like for those that are outside of Spain, there's I think it's BBVA, the BBVA, and they were advertising the other day, like, come to our bank, we'll give you on your savings. I think that it was like 0.9% or 0.5.
Yeah.
And obviously they're advertising that they're like, that's a good thing, and people are like, yes, I'm gonna get 0.9% interest. But I mean, and I think this, and I imagine you're going to touch on it in a sec. Why is putting your money into a bank not the best thing to do with your money?
Just because those rates are so low. And okay, they're going up now, but they're not going up anywhere near as fast as the banks. They're not tying it to the actual interest rate. They're certainly not tying it to inflation. So I don't know, I've tried to find this out, but my Spanish is rubbish. I couldn't find out what the actual interest rate is in Spain. But in England, the interest rate is like 6, 7, 8% or something now, and inflation is like 11%. But even so, the best savings products in England are still like 4.5%. Now that will probably go up in the next few months because the banks are now competing like crazy for people's money. But it's still their mortgages and the interest they're charging you on money that you borrow from them. That's certainly meeting the interest rate. So that they're doing it that way, and then they're throwing people this dry bone of 0.9, and my bank is put it up from 0.1 to 0.01 to 0.03. It's just a third of a percent. Is pathetic. And Spain isn't as competitive, doesn't seem to me to be, with the savings products that they offer compared with the UK. But if you live here, you can't take advantage of the ones in the UK. But it's pitiful, and they're able to do that because we've all got used to it. Just like we've all got used to low interest mortgages, which are now no longer the case. But they're certainly not meeting it with the savings because they don't have to. There's no law that says they have to keep up with the interest rate, so they just don't.
So I mean, thinking about our sector then, ELT is notoriously underpaid, overworked, and hence why I say that it's quite unprofessional in some areas. But people do make a career out of it. People do. I mean, we love this industry, right? We stay in it because for the money. But if we are going to be doing something worthwhile with our money, what are some of the things that teachers should consider? If they've got that extra power, if they're looking to start, and we're going to talk about your course in a sec. But what are some of the things that they should consider doing with their funds?
I think the first thing to do, because it's fairly easy to do, is find out what the deal is in your country with pensions. So, you're not going to, as an ELT worker, it's very unlikely, unless you work for the British Council, and maybe not even then now, it's very unlikely you're going to have a workplace pension. So the first thing you want is a workplace pension, because your employer is going to pay into that. They're giving you free money. If you can't have that, which you probably can't, you want to be finding out about pensions in your own country. Or if you're going to be moving around a lot, which is really the typical scenario for people, you just need to find out about things that are not pensions, but are just things where you can put money in. And basically, you're talking about the stock market. So that's not the only thing there is. And it's not the only thing I teach, because I think it's important to have a range of different types of investments. But you just need to find out what your options are. The problem is, it's really easy to say that there are lots of options. And then there are lots of platforms. And it took me 6 months to work all this out by myself. And that's from the basis of me not going to be leaving Spain anytime soon. So at least I only had that fixed kind of location to deal with. But it is hard to wade through all the information. Doesn't mean you can't do it. Reading books like Rich Dad Poor Dad will get you onto the idea, but that's conceptual. The practical stuff is going to be found by reading. websites information, government information. It's quite overwhelming. And like I said, it took me 6 months, and then I made mistakes after that. But it really is just about, I think you just need to find out about how you can invest in pensions or stock market things where the fees are low. But again, what is a low fee? Most people don't know. A low fee, trust me, is not 1%. 1% is a very high fee. So if you're paying 1%, you're paying more than you should be, but you need to then learn how it all works. And so this is what I teach. And it's very hard to answer the question in 5 minutes because it takes me 6 weeks, but it only takes me 6 weeks to teach somebody. It's not a degree that you need. You don't need to have a finance degree or the equivalent of now that you suddenly got to kind of scrabble to learn all this stuff. You just need somebody who's, cutting through it for you, which is what I do. But it's not hard to understand. This is the weird thing. It's really simple. It's just a morass of stuff.
I completely agree. Before I started learning about money, I thought it was, even looking at when they talk about the economics on the news, right, the economy and things like that, I would tune out because I had in my mind, it's impossible to understand. But once you learn the basics, it's actually very easy to understand the basics, right? Like you mentioned, we're not looking here to be professional investors or investment bankers or anything like that. So we're not looking at
you're not going to be a trader, that's not.
But the absolute basics are really important there. And it's interesting you mentioned the idea of pensions. Because I'm Australian, and in Australia we have quite a
superannuation,
very good system, I'd say, compared to where we are. Or in Spain, they have Social Security. Once you retire, you get a pension, which is pretty cool. But
it's the best in Europe, apparently, like the highest one in Europe. But we pay through the nose for it if you're a freelancer. So
it's madness in Spain. But yeah. So for those people not. Would you recommend then that, just for one of those points, would you recommend that looking at the idea of a pension or putting something into something that's going to grow like a pension is one of definitely the first things that we should be thinking about?
Well, I just think it's the one. It's very difficult again because it's about your goals. You need to have long-term and short-term goals. And the problem with the pension is you can only access it after a certain age. So, and if you're in your 20s, that just seems so ridiculous to you that it's going to put you off. So if the idea of it puts you off, crunch that one, do it later, do something else, do something that's more short term. And so there's plenty of short term things out there because just the rise of fintech, which basically finance technology and all that stuff that's out there now that didn't used to exist a few years ago. So you can do a lot of things like that. But what a lot of people end up doing is crypto, and they've heard of crypto. And so that's what they do. And crypto is gambling. It's speculating. It's not investing. And so it unfortunately people take the idea of I'm going to do something with my money and then they put it there, and all they really might as well just go to the casino.
Yeah. I mean, interesting point that you talk about the different types of investing there. Because obviously there are many things. Obviously, you have value investing, growth investing. If we're looking at stocks, if we're looking at currencies and things like that. Are these the things that you talk about on your course?
So I don't teach anything to do with currencies because really that is trading, like you're getting into the thing of trading. But of course, if you've got money in one currency and you start paying attention, then you can start changing it around. I used to do that years ago. Actually, it's called arbitrage, I think, where you just see like you make sure that you buy a load of dollars when they're cheap, and then maybe you wait a year and you switch them over. But I think that is much more active than the kind of stuff that I'm talking about, because I'm really talking about passive investing and products that behave like that pay out regular income. So the stock market would be the growth thing, but like you said, in the middle of that there is value investing, growth investing. And I don't, in this particular course, I don't go into that much detail because I think at some point I might do something later for people who have got really into it, but I think you don't need it. You really just need to be index funds. Basically you just need to be doing that, and that's enough, I think.
Yeah. Okay, cool. So if someone takes your course, then you mentioned that it's 6 weeks. At the end of that 6 weeks, well, they should feel confident in being able to put their money to work, correct?
Yes. The big difference for people is that first, like, it's a load of input, like here are the different things you can do, or at least some of the different things you can do that I think are low risk. And well, and it's not, I think they're generally considered to be low risk. And then it's working out what your goals are. So we spend the end of the course really with the strategy, and that sounds really scary, but strategy is just, because I used to hear when I was learning, like, you need to stick to your strategy, you need to stick to your strategy. And I'm like, but I don't know what a strategy is. And it is just, where am I going to put my money? How much am I going to invest? When am I going to put the money in? It's just that, like, what things am I going to do? And so I help people plan that, because it's about your goals. And there isn't one way for everybody. There's certain tools, and you're going to use them in different ratios, probably. So if somebody comes out at the end of the course doing the same thing as me, then something's gone a bit wrong there, because they're not living in Spain, single parent, my age, it's like, it doesn't make sense. But it's so big change that happens to people is they just start understanding. So when you're saying that, it's interesting, you hear these economics reports, you just switch off. And people start sending me, every time it's happened now, it's third course I'm on, people start sending me articles and being like, I understood all of that. And it's like this missing piece of the world and the human experience, because the economy and money, once you understand money, you start to understand the economy. That starts to affect how much you understand politics. It really, like, ties the missing thread that ties an awful lot of stuff together.
But I think it's empowering. If you're understanding those things, you have a much better understanding of how it affects you and the people around you. And I mean, ELT is often thought of as like a thing to the side, but it's actually quite important in terms of a sector that's affected by these things, such as politics and the economy, especially if you're involved in the business aspect of ELT and running your own, institution or academy. No, it's very interesting. I thought though, perhaps someone's thinking, right, well, I'm a teacher, I'm earning, let's say Spain, an average salary might be 1,200 euro a month, somewhere around there.
Yep.
For a teacher. They're going to be saying, okay, I'm paying rent, I'm paying my food bills and things like that, and I have a social life. What's realistically, how much money could I be putting away into investing, or should I be thinking about doing something with each month? Is it easy enough for me to do something with 50 euros a month, or do I need to be putting more in? Is it something? I mean, this is the question. How much should we be looking to work with each month?
So it really is, how much can you? Because anything that you do is better than the nothing that you're doing at the moment. Like, well, the general you. Like, if you're doing nothing, then whatever you do is going to be better. And of course, the more money you put in, the higher the returns are going to be. But the thing is, and this, like, needs graphs to explain it, but compound interest is the mathematical formula that's at work for you. And compound interest is just this thing that means that money that you invest, it goes up, 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 and then it just starts going up like a rocket after a certain point. And it's about time. So if you've not got lots of money to put in, but you're putting it in over 40 years, it's going to turn into something quite impressive, and it's going to be more than the zero that you were going to have. So it's really just, what can you afford? But, I think that for a lot of people as well, once they start, like, let's say that you just start by putting in 50 euros a month, then after a while of seeing, oh, that grew without me doing anything, you'd be like, maybe I should put a bit more in, and you start reprioritizing. And then also the thing is just, what you're doing is establishing a habit, because you're going to have that money automatically going out of your account into wherever it is you're putting it, and you're not going to notice it, because that's what happens. This is what happens with all of our things. And so it might mean that you've got this amazing habit established, and in a few years' time you start earning more money, and now you're going to put more money into your thing. So ideally, somebody would start in their 20s, because the maths on this, if you start in your 20s and you put in about 400 a month, which is quite a lot, but anyway, let's say that you could do that from your 20s, you will retire with a couple of million if you do it for your whole life, and you have got like 10% return every year. So the numbers are just ridiculous. So that's maybe not realistic sum for people in TEFL 400 a month. But even if you just put in a pound or a euro or dollar, whatever, a pound a day, 20 years, you'd have saved 7,201 euros, dollars, whatever. But if you invested it at 10% return every year for 20 years, that would have turned into about £20,000. If you leave that there for 40 years, it'd be 159,000. So it's like no one can tell me they don't have enough money to do it, because you can do it with anything if you've got enough time to throw at it. And if you're coming at this later, yeah, you've not got as much time, but it's still going to be better than the nothing that you were doing. So I just think that is a bit of a red herring, the how much, because it puts people off.
Yeah.
And it's not actually as relevant as you think it is. More is better, but time is the thing that matters.
Yeah. Okay, another question that's probably going to come at us. We've just probably gone from a bull market to a bear market. So we've done something that there's been everything's been going up, and now Ukraine, COVID, whatever, the world crisis, right? They're probably going to be saying, well, if I put my money in and a month later I've lost money, I've lost 4% on my investment. Nicola, you told me to invest. What should I take all my money out? What's happening?
So this is the worst thing that you can do. Is, first of all, watching your accounts is the worst thing you can do. Second of all is acting on what you see, because if you take the money out, you will have lost money. But if you leave it there, you're just seeing a change on paper that isn't real. And likewise, if it's gone up a lot, the people in the bear market who weren't taking their money out had not made any money until they sold those things. So the principles, you have to learn the basic principles of investment, and you have to learn the psychology of it, which is don't panic, don't do anything. Actually, people think they need to do something. So yeah, anybody who starts investing now is going to see their money go down, like in the next, nobody can tell you how long this is going to be, because we are in a bear market and we're probably heading into recession. So people are going to see it go down. But what you've got to do is just keep putting your money in every month, because what you're doing is buying in the Christmas sales instead of in the high season. And so it's about understanding that, and then it's about just following your strategy. And that's why you build one, so that you just go, I will make an unemotional decision to carry on as I am. Because there've always been ups and downs with the stock market. And the stock market is only one type of investment anyway. So I teach other things that don't have that volatility to balance it out. But even the stock market, it's always recovered in the past, because you're talking about global commerce and production and human activity and making things. And if you think that all of those things are just going to collapse and no companies are ever going to make a profit anymore, and everything's just gone, which is what people thought in the 2008 financial crisis, there were people in the investment trade who were just like, this is it. How can we ever come back from that? And of course they did. It took a couple of years, but the recovery happened, and anybody who stayed in and kept themselves investing was rich at the end of it. It's just stay and carry on, and then these times you start to see those opportunities instead of disasters. They're a disaster for you if you're retiring right now, but if you know what you're doing, you will have taken steps to kind of make your devolatize, if that's a word, devolatize your portfolio of investments anyway. So you should be changing it to something less. But it's not a good time. It's not a good time for people who are retiring right now. But that's not, I don't think that's anybody that we're talking to actually.
Yeah. No, obviously you're touching on a really important point, especially with index funds, right? The idea is that you're putting it in there and you're kind of not looking at it for the next 20, 30 years and seeing it accrue, and compound interest being at work there, working in your favor. I think what really, for me, in terms of understanding the benefits of index investing in this manner, was looking at for like the S&P 500 over the past 100 years.
100 years. Yeah.
The recessions that we had, and how every time the market overall globally has not only returned, but has improved. Even with COVID, we had that massive drop. And then it was the fastest the fastest return to the peak.
Yeah, 2 months.
Yeah, it was really.
Yeah.
Obviously, we're not professional investors, but the idea that you can put your money to work long term has been proven, time
over. Yeah, exactly.
thousands.
And there is no guarantee.
Hmm.
It is possible that we're not going to ever achieve the highs of last year. It's possible, but if you're starting now when it's down, you actually don't need to achieve the highs. You only need to achieve growth from where you started. So it's just this, again, it's just very hard if you don't understand it at its basic level. Then what I'm saying sounds like nonsense, but once you start to understand it, you realize, okay, this is how this works.
Yeah. And actually, that is quite a nice segue to our next point, sort of the last section of Spanish chat. It's always about books or things that that teachers can read or dig into. I mean, obviously, you've read a lot yourself, and you've obviously created your course, and we're gonna send a link. I'm gonna put a link to the course and for teachers. But are there any sort of resources that you could recommend for teachers to dip into, as you mentioned before, getting an understanding of those concepts or ideas? What would be some of your recommendations?
So if you're looking for basic concepts, I favoured podcasts actually for a lot of this stuff. And so there's quite a few that I've, been slowly listening to. And it's not really that there's one thing and then you'll understand it all. You kind of got to, listen to a lot of them. So the one I started with was Invest Like a Boss, which is a bit dude bro-y for some people, but they cover an awful lot of different stuff, and I learned a lot from them because they've read a lot and they're talking about the books they've read, and they're also doing it, and now they're into a lot more specialist kind of venture capitalist stuff. But so they were quite good if you can tolerate the style. And then if you're in the UK, Money to the Masses and This Is Money, there's quite a lot of good stuff on there, but again, you're going to have to pick the episodes if you want to just learn about certain things. So they're the three that I like the best. America, you've got there's a podcast by a woman called Delianne something, Diversifying it's called. She's pretty good. So, and you can start following people on Instagram and Twitter and stuff who just put out these little sound bites, but it's that way of doing it is going to take you months, like it did for me. And even when I was writing the course, I was realizing, okay, there is a little gap in my knowledge here. I'm going to go away and specifically learn about that. And then I'm just using Investopedia because it's explaining the things, but it's because I know what I need to look up. And when you start, I don't think you can just be like, right, I'll just read everything on Investopedia.
Yeah, no, that's a good point. I mean, podcasts. For me, I didn't start with podcasts. I started with Rich Dad Poor Dad, and then I jumped actually to Benjamin Graham's Intelligent Investor, which was a mistake because this is quite it's
weighty tome.
But you raise a really good point. There are a lot of things that you need to have an understanding of before you start flourishing.
Definitely.
And so, as you mentioned, those podcasts are probably a very accessible way of on those things. That's more. I mean, it's not that you can interact, but it's probably more understandable than these sorts of things.
More digestible. I mean, Money Master of the Game would probably be a more approachable book than the one that you've just shown there. And then, I think your book there is for if you're really into it and you really kind of want to study it, but it's not necessary. It isn't necessary to go in it at that level. And again, if you give somebody a really hard book, then they're just going to be like, oh, I can't do this. So I think the podcast is good because it's just so much more approachable for most people. And, the dude bros make it approachable. I mean, that is what they do. I love those two. So if anybody ever hears me, I'm not slagging them off. I think they're great.
Yeah. Okay, brilliant. Yeah. And so what about you then? What's next for you? Is this, in terms of the Chilled Investor, is it just focusing on this course? Are you going to be focusing on other things in the future?
Well, I'm still, because I've run the course. This is the third time of doing it live, and the point of that was to get to the point where I was perfectly happy with the content, and then I'm going to turn it into something more like self-study, but with some live elements, which I'm sort of, I've not changed the content this time, but I am tweaking the structure. I'm starting to realize that people want the input stuff doesn't really need the interaction, but it's the questions and the strategy stuff and the hand holding. Actually, people kind of need a little bit of encouragement to then start opening their accounts. But so I'm going to sort of change the way that I do this. So in January, the next course will hopefully be partially at least video based. And then what I want to start doing is try to break it down into bits so that people can be like, okay, I just want to deal with this part. Because for some people, the price is a problem for them, the time commitment is a problem for them. But it's hard because you can't ethically just teach a little bit of it, because then people will only know about that thing and they won't, for example, the psychology, they'll think, oh, well, I'll skip that, I'll be all right. But they won't, because I sold stuff in a blip last year and then took the loss because I'd crystallized it, and then I put it in something riskier. And I just I look back at myself now as an idiot. But the problem is you can tell yourself all of this stuff because you've heard people talk about, leave it alone, and you won't. So you need to really learn the psychology. You really need to understand it, but it would be easy for people to skip that part. So I want to try to turn it into something that's a bit more modular, but that won't just leave people with part of the story and then it will kind of end up going wrong for them probably. I don't want that on my conscience. So that's it. That's my challenge, is sort of messing around with the material a bit so that it can be a bit more breakdownable. But I don't really see myself having different things, because the thing is once you've taught somebody about investing, there isn't really anything else to teach. It's you're done, just go and do it. Don't think about this again if you don't want to. Yeah, I could teach things like, allocation portfolio models and different allocation things and stuff, but it's like it isn't important enough. I'm quite interested in it, and I also might go and do a course about trading. Could I do that as a full-time job? Maybe. So it's going to be more about like what I do personally. I think I don't think there's anything to teach other people, and even if I learned trading, I would never try to teach it to somebody else. So this is kind of where I stop, really, because it isn't something that you're going to have to keep learning about.
Yeah. Okay. Very cool. All right, to finish off then, if you had to give 3 tips to teachers, kind of summarizing what we've talked about, what we've chatted about so far, 3 general tips for teachers and money, what would it be?
Okay, the first one is just work out an amount that you can put aside every month, and it doesn't have to be a lot. It just has to be something you can commit to. So make it, not scary for yourself. Commit to it and have that be put aside, and then you can go and learn about investing, and then you'll be able to have somewhere for that to go. The second one is your biggest way of investing really is in yourself. So if you can do a course or do a thing or start your side hustle or whatever it is, so you can put more money in the top, then you're going to have more money to invest. So that's the second one. There's nothing's going to replace a pay rise, really. And the third one is, get a pension. Just do it. The state pension might not even be around
exactly
when we come to it, and Spain is notorious for the fact that it's paying the best pension ever, but it's completely unsustainable. So don't rely on that. Do something yourself. There are tax breaks usually on pension in some way. You just have to find out what is the one in your context and then take advantage of it, because tax break is free money as well.
Brilliant. Excellent. Well, Nicola, a very, very insightful perspective, Sponge Chat. I do hope teachers listen to this and think, I can do that.
Yeah, because you really can. You really can. It's something that's been so gatekeeper guarded, but it's only because people don't. They want to make a lot of money from doing it for you. That should be the third tip, actually. Do not use a financial advisor. Don't hand it over to somebody else. They will charge you, and it will cost you thousands and thousands and thousands over your lifetime. Do it yourself. Just put in a bit of time to learn it, then do it.
Yeah, brilliant. Well, I want to say thank you very much for being here today. For anyone that's listening or watching, I'm going to put links to the Chilled Investor, and for those that want to get in touch with you, Nicola, they can get in touch through the site and through LinkedIn, I think. And when's your next course? Do you have any courses?
So it will probably start in about the third week of January, just because I think give people a little bit of time to recover from Christmas, and schools in Spain don't go back until the 9th, so I won't be available. So yeah, next one in January, and then we'll see, because by then I might have it as a more kind of rolling evergreen type of course, but January would be the next one. And in the meantime, sign up for my newsletter. It's really just a way of getting to know me a little bit better and see how a longer version of how I got into it in the first place. And I really love writing that newsletter. So this has given me a real opportunity to just write again. So I would do that. So you'll find that by visiting the website, which is chilledinvestor.com, and you can just sign up to the newsletter. And that would be the way to kind of just, hang around a bit and see what I've got to say.
Excellent. Well, Nicola, thank you very much. And we'll see you again soon, okay?
Thank you.
All right. Bye.